I am going to answer the title question directly before I do anything else. Because most videos like this bury the answer in the last 30 seconds and you deserve it up front. How often do you need to buy crypto to become a billionaire? The answer is not once a year. It is not once a month. It is not even once a week. The actual answer, backed by 13 years of documented price history and 4 complete market cycles, is this. It depends almost entirely on when you start, how long you hold, and whether you buy with enough consistency during the moments when nobody else wants to. Not financial advice. This is education. And the math I am about to show you is either going to completely change how you think about this space or it is going to confirm exactly what the most successful crypto holders already know. Let us start with the most documented wealth-building strategy in crypto history because it is also the most boring, the most misunderstood, and the most consistently rewarding. It is called dollar cost averaging, DCA. And most people in this space dismiss it as a strategy for people who do not know what they are doing. Those people are wrong. And the data proves it. Dollar cost averaging means this. You choose an amount. You choose a frequency. Weekly, biweekly, monthly. And you buy that amount on schedule regardless of what the price is doing. When the price is high, your fixed amount buys fewer coins. When the price is low, the same amount buys more. Over time, the average cost of everything you hold is automatically lower than if you had tried to time a single entry point. The math is mechanical. The discipline is human. And the discipline part is what separates the people who build real wealth in this space from the people who keep starting over. Here is what the backtested data actually shows. A $10 per week Bitcoin DCA started in January 2019 and held through 2024 turned $2,610 in total contributions into $7,913, a 202% return. For context, gold returned 34% over the same period. The Dow Jones returned 23%. And this was an investor buying $10 of Bitcoin every single week, including through the COVID crash in March 2020, including through the bear market of 2022 when Bitcoin fell nearly 80% from its highs, including through the FTX collapse when crypto felt genuinely broken. But $10 a week does not make you a billionaire. So let us look at what does. $100 a month. Starting January 2014, held through early 2026. That is $1,4,600 in total contributions across 12 years. The documented return on that strategy approaches $1 million. 6,712%. Just under $1 million from $150 a month, over 12 years buying Bitcoin and never touching it. Now here is where the math gets genuinely life-changing. The consistency of the buying matters less than the duration and the selection of the asset. Because Bitcoin's price went from $20 in January 2013 to over $123,000 in July 2025. That is a 20 million% return over 12 years. If you had invested $1,000 in January of 2013 and simply held it, that position would have been worth $200 million at Bitcoin's 2025 all-time high. $1,000. $200 million. 12 years of doing absolutely nothing except not selling. But that is the lump sum version, which requires perfect timing. DCA is the version that does not require any timing at all. And that is the structural genius of it. You are not trying to buy at the bottom. You are trying to own more of the asset across every price point so that when the inevitable multi-year bull cycle happens, your average cost is low enough that the gains are life-changing even if you did not time a single entry perfectly. Now let us talk about how crypto cycles actually work, because understanding this is what determines whether the DCA strategy you build today has billion-dollar potential or just good savings account potential. Bitcoin has followed a remarkably consistent 4-year cycle since its earliest days, driven primarily by a built-in event called the halving. Every approximately 210,000 blocks, which translates to roughly every 4 years, the amount of new Bitcoin created per block is cut in half. This mechanically reduces new supply entering the market. When demand stays constant or increases and supply decreases, prices tend to rise. It is not complicated economics. It is supply and demand with a predictable, scheduled, publicly visible supply reduction built into the code. The patterns have repeated with enough consistency to be useful for planning. the 2012 having preceded the 2013 bull run to $1,100, an over 9,000% gain from that cycle's low. The 2016 having preceded the 2017 bull run to just under $20,000, a gain of nearly 10,000% from the cycle low. The 2020 having preceded the 2021 run to nearly $69,000. The 2024 having preceded Bitcoin reaching $123,000 in July of 2025, a 716% gain from the 2022 low of $15,479. Here is what this cycle history tells you about the DCA math. Average rally percentage from a 70% or greater decline in Bitcoin's history, measured across every major cycle since 2013, is 3,485%. The median is 1,692%. The minimum documented rally following a 70% or greater drawdown is 101%. The maximum is 12,804%. Put those numbers against a consistent DCA strategy and the question stops being whether you can build significant wealth. It becomes how much and over how many cycles. Let us do the actual math for 3 different investor profiles. Because the billionaire question deserves a real answer, not a vague one. Profile 1. The person who starts small and stays consistent. $100 a week. Starting today with Bitcoin at approximately $75,000 per coin. Over 4 years at that rate, you have contributed $20,800 in total. If the next full cycle delivers even the minimum documented rally of 101% from a bear market low entry, and your average cost reflects buying through that bear market via DCA, the math gets very interesting very quickly. If Bitcoin follows even a conservative next cycle target of $250,000, which multiple institutional analysts including Standard Chartered and Tom Lee of Fundstrat have modeled, $100 a week over 4 years produces approximately $69,000 in position value. Not a billion. But a 700% return on capital is not something any other asset class has documented with anything close to Bitcoin's consistency. Profile 2. The person who can commit $500 a week. That is $2,000 a month. $26,000 a year. Over 10 years of consistent accumulation across 2.5 full Bitcoin halving cycles, with reinvestment and compounding of any yield on altcoin positions, the documented returns at Bitcoin's historical average cycle performance bring total portfolio value into the multi-million-dollar range from roughly $260,000 in total contributions. 3 to 5 cycles of DCA at $500 weekly into Bitcoin alone, held through every bear market without panic selling, is how multiple documented crypto millionaires built their positions. This is not speculation. It is arithmetic applied to 13 years of verified price data. Profile 3. The person asking the actual title question. How do you get to $1 billion? Here is the honest math. At Bitcoin's 2025 peak of $123,000, you needed approximately 8,130 Bitcoin to hold $1 billion in that asset. At today's price of roughly $75,000 per Bitcoin, 8,000 Bitcoin costs approximately $600 million. That is not a DCA strategy. That is institutional scale. But billionaires from crypto have not generally been made by buying Bitcoin alone through DCA. They have been made through 2 mechanisms. First, early entry at pre-cycle prices combined with multi-cycle holding. Someone who DCA'd $1,000 per month into Bitcoin from 2013 to 2017 accumulated roughly the same Bitcoin holdings at an average price of a few $100s that would later be worth hundreds of millions at 2021 and 2025 peaks. The billionaire outcomes in crypto almost universally trace back to entry prices that are now permanently behind us for Bitcoin specifically. Second, altcoin asymmetry. XRP went from a fraction of a cent to $3.65 in 2025. HBAR went from fractions of a cent to over 40 cents at its peak. Assets with smaller market caps require less capital inflow to produce larger percentage moves. A $2,000 monthly DCA into XRP starting in January 2022, held through the bear market to its 2025 highs, turned roughly $72,000 in contributions into a position worth significantly more, because the percentage gain from XRP's low of around 30 cents to its peak of $3.65 represents over a 1,000% move. The honest answer to the title question is this. Becoming a crypto billionaire from a standing start in 2026 through DCA alone requires either extraordinary capital to deploy, extraordinary time across multiple cycles, or extraordinary selection of early-stage assets that outperform Bitcoin on a percentage basis in the next bull cycle. But becoming a crypto millionaire through consistent DCA is something the data has documented happening repeatedly across multiple cycles to people who started with as little as $100 a month, held through multiple 70% drawdowns without selling, and stayed positioned through at least 2 full 4-year halving cycles. And here is the detail that most people in this space never absorb properly. The bear market is not the obstacle to building wealth through DCA. The bear market is the mechanism. The 7-year fear-weighted DCA backtest, meaning a strategy that increased purchase amounts specifically when the fear and greed index dropped below 25, returned 1,145% from 2018 to 2025. The best returns came from the worst moments. The people who panicked and stopped buying in December 2018 when Bitcoin was at $3,000, in March 2020 when it crashed to $4,000 in a single day, in November 2022 when FTX collapsed and the index read single digits, those are the people who handed the gains they had accumulated to the people who kept buying. Right now, at the time of this video, the fear and greed index is sitting in extreme fear territory. Bitcoin is trading well below its 2025 all-time high. The Clarity Act has not yet passed. The macro environment is uncertain. And the sentiment in this market is as negative as it has been at any sustained period since the 2022 bear market bottom. Every data point in 13 years of Bitcoin cycle history says that this is the moment that matters for anyone running a DCA strategy. Not because the price cannot go lower. It can. Not because the timing is perfect. It never is. But because the 7-year documented track record of this market says that extreme fear entries, maintained consistently through the recovery, have produced the largest documented returns in crypto history. The question was never how often you need to buy to become a billionaire. The real question is whether you can buy consistently enough, for long enough through enough pain, to let the cycle do what cycles have done in this asset class every 4 years since 2013. The math does not lie. 13 years of documented returns do not lie. Whether the next cycle matches the last one or exceeds it or falls short of it is genuinely unknown. But the structural case for consistent accumulation during fear, held through multiple cycles with a clear exit strategy, is the most evidence-backed wealth-building argument that exists in this asset class. Not financial advice. Ever. Build your own plan. Understand your own risk tolerance. And never put in more than you can genuinely afford to hold through a 70% drawdown without being forced to sell at the worst possible moment. If this video gave you the mathematical framework you needed to think about this more clearly, hit the like button right now. That is genuinely how this reaches the people making these decisions right now during extreme fear when information matters most. Subscribe if you want every major cycle development, regulatory shift, and institutional data point broken down the moment it becomes relevant, because the window between fear and the next move has never rewarded sitting on the sidelines. Here is your comment question. What is your DCA schedule right now? Weekly, monthly, or fear index based? Drop it below. Let this community see how people are actually positioning through the bottom. And if you know someone who stopped buying when the market dropped and is waiting for confirmation before starting again, send them this video today. Because the confirmation they are waiting for is the confirmation that never arrives before the move has already happened. Stay consistent. Stay patient. Let the cycle work.